Well, let's get started over here in our futures provided by Bar Chart on the Market Day Report. First of all, this corn market that was higher on the overnight trade, but kind of slipping backwards here today now and continuing to kind of slip just a little bit. May corn is down 6.5 at now 6 3/4, almost on the low of the day, 5.40 3/4, only a half a penny away from it. December, though, is down just a quarter at 4.70.5, just about in the middle of a range here. Over in the soybean market on this Monday, brand new month, brand new week. May soybeans down 7 at 13.97 1/4. Notice here we have fallen below $14 now on all front 5 contracts. We'll find out if that's significant here in just a moment, but the Chicago wheat market for July is down 4 at 6.46. July Kansas City wheat down 5 at 6.32 3/4. And on over in the Minneapolis wheat market, that new crop July is down 4 3/4 at 6.42. But cotton today, just on a big rally. May is up 2.65 at 91.48. December, the new crop is up 2.23 cents per pound, and that's at 86.56. So let's turn to Todd Horwitz with Bubba Trading here, who joins us now. Boy, this cotton market really taking off and bucking the trend here today, Todd.
Good morning, John. And I think it's actually a little bit of a short covering rally, and we have actually turned negative on cotton to begin with. And I think that this is an opportunity for sure to sell. If you're a trader, and if you're not hedged, you should be hedged up here. I mean, this is, we haven't seen prices like this for who knows how long, right? And this is one of the things we're seeing, and this is the opportunity to take advantage of a market that's being, driven by, I don't think, anything other than a little bit of a squeeze and a couple other little things. But overall, I think that, you've seen probably, a good opportunity here for you, because that's what we see, and that's what I've done myself. So we are, working that way in cotton. I think that, that's the grains look great, although obviously they don't look great at the moment, but they still look really solid.
Do you get the feeling that maybe there's some outside money that may want to come in and buy these grains when they're at these levels, that this would be a buying opportunity like you were just talking about?
Well, John, I think so. As you look at the technical parts of the markets, which is basically what I watched, and tells me what the fundamentals are by watching the price action. And the pullback is natural. I mean, it doesn't feel good, and certainly when you wake up and you see, or last night you looked and they were much higher, you go, wow, this will be another good day. And suddenly they've lost ground, and soybeans have been extremely volatile. I mean, they were up about 14, down about 14, and now they're down 8 after, just coming back to positive. But as long as they can hold, up about, 1380, they're going to be solid as can be, and should be able to make a run at 15. And corn, as long as you can hold probably 540, we'll make a run to 6. And wheat, I think we'll be over 7. So I think that this is more of a buying opportunity. However, it does not take away that if a farmer or producer should always be hedged, because then you're already locked in and you never give up the upside, but you might as well protect some of the downside.
Now, I know last week I had the opportunity to sit in on one of your seminars there on the web. Talk a little bit about that, if you will.
Well, every Monday we do a live call, and we spend the first hour talking about the commodity markets and what's going on, and of course this inflation that supposedly doesn't exist. This is one of the things we kind of address everything from a real life, real look at it from traders and people that understand markets. And I bring in Andy Hecht, who obviously has been in business for 40 years as well. So we have some pretty dynamic conversations, and if anybody'd like to check it out, they can email me, and I'll send them a link and invite them to check it out.
Okay, that sounds good. Well, we'll take a break and come back in just a moment and visit with Todd about this livestock trade, what we see going on there. That's straight ahead here on the Market Day Report. Brand new information from the USDA that we need to pass along here, and that's the beef and the pork cutouts. The beef cutouts higher. Again, the choice up 45 cents. The selects up $1.69. The pork cutouts mostly higher. Carcasses up $1.51. Loins up 43. The bellies up $7.33. The only one that's lower is the hams. They're down 42 cents. I want to go over here to the futures right now, provided by Bar Chart. April live cattle down 80 at 119.20. And of course, today is a show list day. Over in the feeder cattle market, April is down $1.30 at 141.27 here. And about almost a Well, not quite a $2 trading range over there in the feeder cattle market. With lean hogs, we've got the April up 77 at 87.92. First of all, Todd, I want to start over here with this market with volatility. There's been talk that, maybe we'll continue to see this volatility. But one of the things I found interesting was my wife and I had the chance to visit Montana this weekend, and that's where the governor kind of rolled back some of these mandates from COVID-19. And I got to tell you, Todd, the restaurants, every restaurant you went to were packed full, wall to wall with people. It goes back to talk about that pent-up demand that you and I have been talking about for quite some time.
John, it's right. And it's funny because, I flew this weekend and you wouldn't know if you're in the airports that there was a problem now. So we're starting to see, obviously, some things open up a little bit more. And, of course, that will be very good for the protein complex as it happens. Now, in today's action, it's been obviously extremely wild back and forth. But there's a little bit of cause for concern now. Again, it's price action, not, what's happening. But, you're seeing a little bit of selling here. But, of course, you've got the equity markets going ballistic today, which is the old, markets come in like a major bull instead of a lion. And, I think that they look good, and I would continue to look for opportunities to buy them. But this is the perfect example of why you should always be protected as well, because, again, you can protect without giving up the upside potential, but have some protection because, markets never announce their overall intentions. And hogs look phenomenal. But they're going to see us a little bit of a sell-off one of these days as well, too, because, again, the markets don't go straight up or straight down. There's always some reversal. But, the cattle markets are able to come and get some support, and if they don't hold, then that could be a problem. And hogs look like they're going, they're going to keep going higher.
The energy market, there's been a lot of talk about that, especially with crude oil up here flirting around that $63 level. We're off a little bit here today. We're at 61.38, so we're down 11 cents here on the West Texas Intermediate crude. But can that have an effect on protein demand?
It can, but I think the bigger thing, John, is that they're going to open up and things are going to get better. People are going to ignore the cost of gas for the moment. I think later on that'll become an issue, but I think today I don't think that'll cause an issue. I think right now we're just seeing some natural trading action and everything's trying to settle in. But this overall crude, because crude's probably has an opportunity to go even higher because of this, because we're no longer the producer and we're now dependent on, of course, OPEC and what they decide to supply, which you never know what they're going to do at any one given time. So that, to me, that's a pretty major issue other than everything else.
Todd, thank you so much. Be safe. Right now, the Dow up 630 points, Christina. So we're certainly pushing a little bit higher over here in these outside markets.